Gold prices have shattered historic records, soaring past $4,000 per troy ounce for the first time ever. Yet it's not just the rising value that's capturing attention globally. A surprising trend is emerging about where the richest people are choosing to keep their gold. Imagine a vault so secure it's protected not just by steel and concrete, but by the stability of an entire nation with no enemies in sight. Why are billionaires quietly moving their gleaming reserves from old-world hubs into this new tropical fortress of wealth? The answer goes beyond just numbers, rising gold demand and storage shift. Gold has always been a go-to asset during times of uncertainty, but recent years have seen demand surge to unprecedented levels. Prices recently climbed beyond $4,000 per troy ounce, marking a historic milestone. This rush is driven by fears over economic instability, geopolitical tensions, and concerns about currency volatility. For many investors, gold isn't just a store of value anymore. It's becoming a haven for preserving wealth amid a rapidly changing global landscape. Yet, beyond simply buying more gold, the wealthiest are also reconsidering where their assets physically reside. This shift in storage habits reflects deeper worries about not only the gold's value, but also its safety and accessibility. Traditionally, vaults in London, Geneva, and other Western financial hubs have served as trusted homes for gold reserves. But the current climate has sparked doubts about the stability and security of these locations, prompting investors to explore alternatives. The question now is not just how much gold one owns, but where that gold can be stored to offer the greatest peace of mind. As demand climbs, the race to find safer, more reliable storage locations intensifies, hinting at a broader shift in global wealth management. While this trend points toward moving gold eastward, the reasoning stretches beyond mere convenience or price appreciation. Investors are balancing risk, geopolitics, and trust in governments when deciding where to keep their treasure. The full picture of why wealthy individuals are embracing new vaults lies in understanding the unique blend of economic, political, and security factors that make these emerging locations stand out. The most compelling details about this transformation will unfold as we examine the vaults and jurisdictions attracting this wealth today. There is a growing dissatisfaction with traditional gold storage centers, which is reshaping the global landscape of precious metal safekeeping. Traditional gold vaults losing appeal for centuries, cities like London and Geneva have been synonymous with gold storage and trading, relying on their established reputations for security and stability. However, the traditional vaults in these financial hubs are increasingly seen as vulnerable to shifting political winds and economic uncertainties. Western governments have sometimes faced criticism for tightening regulations or demonstrating inconsistent policies, creating anxiety among wealthy gold holders. This uncertainty prompts investors to question whether these vaults can continue to offer the same reliability they once did. Political tensions between major powers have cast a shadow over the previously unchallenged safety of these vault locations. Tariffs, sanctions, and trade disputes have made investors wary of potential government intervention or limitations on asset access. Moreover, the legacy systems and infrastructure in older vault centers have not evolved as rapidly to meet modern security demands or the expectations of a new generation of high-net-worth clients. As these concerns grow louder, many of the richest individuals are taking a harder look at alternative options beyond the traditional Western strongholds. The desire for a vault truly insulated from these uncertainties leads many experts and investors to consider Singapore's remarkable approach to security and stability. Singapore's strategic advantage. Singapore stands out as a storage location unlike almost any other, thanks to its unique combination of geopolitical stability, legal protections, and economic strength. The city-state's carefully cultivated neutrality means it has no direct enemies and maintains friendly relations across global powers. For wealthy investors, this translates into a rare assurance that their assets won't be vulnerable to nationalization or political coercion. The government's long-term commitment to building client confidence also discourages any interference with privately held gold. Beyond politics, Singapore's robust defense systems add a critical layer of protection. The nation is known for its strict security policies and strong military capabilities, which help safeguard valuable holdings against various risks. The idea that a vault security is built into the country itself isn't just a figure of speech here, it captures how deeply intertwined Singapore's safety is with wealth preservation. This level of protection aligns perfectly with the mindset of those seeking to store gold across decades or even generations. This exceptional stability and trust naturally lead to the design and technology of the vaults themselves, where security meets innovation on a world-class level, so be sure to like and subscribe for more fascinating insights. Cutting-edge vault security, Singapore's gold storage facilities are more than just fortified warehouses. They represent the pinnacle of modern security and engineering. One such vault near Changi Airport, completed in 2024, boasts an advanced design capable of holding up to 500 tons of gold, valued at around $64 billion. The structure's foundation plunges 32 meters deep to support enormous weight, with floors able to bear 90,000 kilograms per square meter, roughly 45 times stronger than a typical car park. This extraordinary build speaks to the seriousness with which security demands are met in protecting high-value assets. Beyond raw strength, the security strategy includes multiple layers of protection designed to stop threats well before they get close. Unlike the dramatic heist scenes in movies, real-world security is quiet and methodical, focused on delay and detection. Insurance companies require vaults meeting rigorous standards, specifically Class 2 Gold Vault rating, which ensures an intruder cannot breach the vault for at least 1 hour. This delay is vital because it provides enough time for effective response measures, minimizing the risk of theft. As security technology safeguards the physical gold, the clients entrusting these vaults reveal why they choose Singapore as their refuge from financial and political uncertainty. Investor profile and motivations. The typical investors moving their gold to Singapore are entrepreneurs and self-made wealth holders, primarily from Western countries like the United States, Europe, and Australia. These individuals often take direct control over their wealth management and seek solutions that offer both security and autonomy. Many are motivated by the desire to protect their assets from political turmoil, economic instability, and shifting policies in their home countries. For them, peace of mind is just as crucial as the potential for profit. Mistrust in governments and financial institutions is a central factor driving this migration eastward. The memory of the 2008 financial crisis looms large, reminding investors that even large trusted banks can fail without warning. This leads many to favor physical gold over paper assets or electronic funds, as owning tangible bars reduces counterparty risk, the chance that a bank or managing institution might default. There is also growing concern about the future stability of major currencies, especially the US dollar, which many fear could lose its dominance. In such a scenario, gold serves as a traditional, reliable backing for any future currency reforms. Its surge in cutting-edge vault security and investor demand signals a profound shift in how and where gold is safeguarded. Future of global gold storage. Singapore's rise as a gold storage hub is still in its early stages, handling less than 1% of the more than $100 billion worth of gold traded daily in London. However, experts predict this share will grow significantly as investors increasingly look eastward for safer and more stable storage options. Alongside Singapore, other emerging centers like Hong Kong and Dubai are positioning themselves as key players, backed by supportive governments eager to develop their precious metals markets. This shift reflects broader geopolitical and economic changes influencing where wealth is secured in the 21st century. The growth of these new hubs is not just about convenience or diversification, it represents a fundamental rebalancing of financial power. London has been the historic heavyweight in gold trading and storage, but rising geopolitical risks and regulatory pressures are prompting a reevaluation among global investors. Asian economic dynamism, plus strong legal frameworks and political neutrality in places like Singapore, create an appealing alternative. Investors are betting on these locations to deliver long-term security, intergenerational wealth preservation, and minimal interference from unpredictable political forces. The world's wealthiest are shifting their gold to Singapore for reasons that go far beyond rising prices. It's about trust, stability, and security, qualities increasingly rare in traditional storage centers. As economic and political uncertainty mounts, Singapore's emerging role offers a compelling refuge for preserving wealth. If you found this insight valuable, be sure to like and subscribe for more deep dives into wealth and finance trends.